This is the briefing for Friday, March 15th. Well, if you listened to yesterday's briefing, you know that it was pretty strange what we saw in the market yesterday, especially in the stock indices. What we saw was the fact that we had slightly lower prices and then a rally going into the end of the day on increasing volume, but decreasing internals. In other words, you can see here, this was yesterday's trading right here. You can see how volume was higher and breadth was very negative. All the other internals were fairly negative as well. This gave me the indication, because you can see this buying tail right here, that potentially this was an exhaustion day on the part of sellers, because they tried to sell it off, and when they reached the 510 area, buyers stepped in and sellers were not strong enough to overcome that buying and drove price all the way back up. That suggested to me there was a possibility that we were going to see higher prices in today's trading. Now, as I discussed last night, in analyzing the markets, it's a series of probability assessments. And what it is simply just the probability of one event occurring over another. In this case, is the market going up or is it going down? And I talked about the fact last night that if we traded back below yesterday's low, that potentially that suggested that it was not an exhaustive day and that we were going to see potentially a greater degree time and price rotation to the downside, such as that it would break the series of higher lows that we have here and potentially suggest something greater in degree of time and price that would test some of these lower support levels that I have marked. The caveat to that was that if we had a lower low below yesterday's low on stronger breadth, that would suggest there's still strength in the market and potentially we would see some type of rotation back to the upside. And I thought that would be the lower probability for today's trading, but that's exactly what we got. I really thought that we were going to see higher prices or that if we took out yesterday's low that we would see prices that would potentially test these lower extremes coming in about the 504 area in the spiders and potentially the 490 area in the spiders. But what we got lower prices and rotation the whole day around this 510 area. Now I'm going to kind of zoom out of this because this is very difficult to see. This is today's trading. So you can see that we spent the whole day around 510. That's a pretty important key reference area. Now you can see I'm going to point it out with my arrow, but I don't want the crosshairs to get in the middle. But you can see the buying tail at the bottom and the selling tail at the top. That suggests a day where neither buyers nor sellers could gain control. But breadth was fairly strong in today's trading. So that did two things. One is it potentially stopped the possibility of trading down to the 504 area and testing that level of support, and it worked off an extreme oversold condition in the short-term time frame. Now we also 52-week highs minus 52-week lows were flat. Volume was basically flat as opposed to yesterday's trading. You can see just a slight downtick in volume in the spiders. In the Qs, basically the same situation. We have a buying tail and a selling tail. We spent most of the day rotating around the 534 area. So it's going to be very interesting. Now in the Qs, we had a continuation of increasing volume, and you can see the move to the downside. Breadth was stronger, so we have a divergence in breadth. So we have a divergence in breadth in the NASDAQ and in the NYSE in consideration with the spiders. So how this resolves itself next week is going to be very interesting. Now keep in mind, there is also a Fed announcement on Wednesday. I think it's at 2 p.m. Eastern time. So that's going to be a news event that is going to be critical to the determination of value on the part of traders. Now, in the Qs, it's important to remember this 434 area is a pretty key area, mainly because we have this series of higher lows, and breaking this level here, this 434, now we closed right at 434, 433.92, you can see. would suggest a potential break of the series of higher lows, which would then open up the possibility of trading down to this 416 up to about the 420 area, which would be the next lower high in terms of the Qs. Volume increasing, breadth strengthening. So they, once again, a day that neither buyers nor sellers could gain control. And in the Russell, we came down pretty much to test the 200 area yesterday, bounced off of that. Volume still increasing in today's trading. And what this is telling me is that there's simply no selling pressure. And when we get the selling pressure, buyers step in and keep it from falling. So we can go back and you can see in the spiders, you can see the same thing. We tried to go lower, but volume was basically the same as yesterday, unable to see the selling pressure come in. Same thing with the Qs. Buying tail came in, volume increasing typically towards the end of the day when the buying starts. So there certainly are some buyers out there that are buying the dips even in the short term and simply continuing to hold this market up, at least at this point in time. 200 is the important support in the IWM. It was tested yesterday, and we almost tested the upper extreme at 205. 210 is really a very important key reference area for the IWM as well. You can see in terms of overbought and oversold, we were extreme short-term oversold in the NYSE. In the NASDAQ, we were short to intermediate term oversold, extremely oversold. So that we got that bounce today. We're neutral basically going into today or at the end of the day today. So that gives us, or basically gives the market the opportunity to really go in either direction on Monday. I really think if we didn't have that news event on Wednesday with the Fed announcement that we potentially could see some type of a breakout move outside of the area of rotation that we've been in. I mean, you can look at this rotation all through here. You've got an area here and an area here. We could look at this all as one single rotation. In the Qs, a little bit better to see it. You can see that complete rotation right through there with this high right around the 448, 450 area in the Qs. In terms of total volume, look at what we have here. This is total volume on the NYSE and total volume in the NASDAQ. But keep in mind, this was an monthly option expiration day, and typically we get big volume spikes right at the end of the day going into the close as positions are squared up. And that's exactly what we got in today's trading. So volume, this chart in terms of volume today is really not any help to us. Looking at the percentage of stocks above their 50 and 200-day moving averages, you can see while they were improving somewhat, you can see that recently, over the last couple days, percentage of stocks in the S&P 500 above the 50-day moving average has declined, and the same thing above the 200-day moving average as well. In the NASDAQ, really, this is pretty sick in terms of the NASDAQ. You can see this whole rally that occurred here. And you can see what was happening with the percentage of stocks within the index itself that was trading below its 50-day moving, or should say above its 50-day moving average, and then kind of a pause and consolidation in that 200-day moving average, same thing, just a pause and consolidation. But you can see the deterioration that's still occurring. And in the Russell, we have basically the same thing, just really not a whole lot of strength coming into the market. So basically, as I said in yesterday's trading or yesterday's briefing, really the probability is such that we could go in either direction at this point in time. I was speaking to a client earlier today and discussing the market with him, and basically I commented that this is a market that I have not seen the anomalies that are occurring within the market itself right now. Yesterday was just a very, very strange day with the internals as weak as it was, volume increasing, but price unable to break out or break below important support, in this case, just looking at this chart, the 510 area. And then today with stronger breadth, the lower prices, rotating right around that 510 area. So the high and low for today on Monday going to be important key reference areas for Monday's trading. But once again, keep in mind, it is not uncommon for the market to pause and just spend 2 to 2.5 days in rotation the week of a Fed announcement. But watching what happens at today's high or today's low in all of the indices will be important, at least in the short term if you're short-term trading. If you're longer-term trading, swing trading, watch these key reference areas that I've listed as important support levels. Once they're broken, that's going to open up trading down to the next levels of support, and you can see those right through there. In the Qs, it's going to be important what happens around 434. Breaking that, you can see this low here comes in right around 420 and then going down to the 416, 417 area. And in the Russell, 200 is important. Below that's going to be about the 196 area. And then below that, we're looking at 187 as support. So watch what happens very carefully if we do get a break of these key reference areas, a break of today's high or low in either of the indices that you may be trading, and watch what happens with the internals. But be very cautious this coming week, especially in front of that Fed announcement. Have a great weekend. I will pick this back up on Monday.